Of the root causes was really the exploding freight costs, volatile lead times, everything. So in Germany, I'm not sure if you have heard that we ran out of toilet paper. A full disaster, empty shelves, similar empty shelves we had here, but the Germans were really upset because they had no toilet paper anymore. We had the production and harbor shutdowns in China. We have rising energy costs and changing economies here. Most importantly, also as a result from the Ukraine is the prices increase in groceries food. We see a lot of changes also from the labor unions really asking for higher salaries to really combat the inflation, which for a company is also a pressure on the cost base. We will see spiking interest rates and currency fluctuations. So this is already happening around the globe. We are talking about changing company valuations, as a lot of the bottom line metrics and balance sheets are changing. The evaluation and assessment companies will also provide different grades, which also have a different impact than on the interest rates. And the most important one is 82% of the CEOs really expect high inflation and also interest rates in this regard. And if we talk about a little bit of the vision. So this is based on an BCG study outcomes. What are potential scenarios in 2030? So one of the potential scenarios, if we imagine how can the current crisis end up, is one is Back to the Future, where basically all the global power plays which we currently see between the different nations are actually going back to a collaborative mode, to a cooperative mode. So everything, I would say, could become back to the normal. Another scenario is the limited stalemate, where we still have the chronic conflict between Ukraine and the non-NATO states around the globe, with the whole and implication about sanctions and the implication to the different business areas. Another scenario could be the tripolar competition, where we are building a Western bloc and an Eastern bloc. So in the Western bloc, there is a unified common sense between North America and Europe. In the Eastern bloc, you will find Russia and China getting more close. And then we have the third bloc, which is basically the undecided path, other countries, other nations, which did not make up their minds so far. And then in that kind of a world, in that scenario, all the different power plays need to find their own routes, their own rules, their whole let's say, inter-nation collaboration and trade, which also may have a big implication to global trade and travel. And the last one is the global escalation, where we see more military conflicts, more wars, disrupted supply chains, and a lot of, for us as companies and consumers, a high implication if we are going into this war. So I'm a very strong optimist. I really hope for going back into this scenario, Back to the Future, not only because this was one of my most favorite movies, but we have 4 different scenarios which can really affect our company. And I think in those scenarios, the scenario planning is also important to make companies resilient in this regard. So what we have seen, 82% CEOs expect the inflation, high interest rates, so that's definitely a topic to act on. We also see that every second company more or less really lack comprehensive and IT tools to really manage those challenges in a company, to have everything relevant to identify which levers can we adopt and can we apply. And the most important one, will take action in 2023 and address global headwinds. And over 70% of companies are planning cost reductions. So question to you, is your company working on cost reductions right now? Ours is. So you see there is at least the numbers seem to be right if I see the sample size in the room. So that's the situation which we need to deal with. So let's go now into the topic how technology can drive resilience. And Nimal, maybe you can also highlight some of your study and findings, especially as you are talking to much more customers than we do, and you have the different neutral perspective on them, and maybe to share some also with some examples
Sure.
out of Africa.
Excellent. I think what is clear is we've just outlined a predictable outcome, an unpredictable outcome, excuse me, in terms of these scenarios. Day by day, week by week, the percentage in terms of where we might land from a scenario perspective changes based on events that are seen from a macro and a global perspective. The good news is the advancements of digital and technology have allowed us to really chart a path from an organizational perspective that allows us to be much more resilient to this change. And organizations should really think about how to systematically and pragmatically make investments in the right spaces to build up that resilience. And that's predicated on two areas. One is building a more resilient tech and digital function as the increase of cyber threats and other digital risks come into fruition, but also to build digital and tech as a capability that can enable future growth so that businesses can leverage on this unpredictable nature of the geopolitical environment to create competitive advantage. The businesses that really harness digital and technology to create competitive advantage will be more agile, will be more adaptable to this new environment. And that really is why we're saying resilience is key, both as an anchor around your digital and tech function, but also as a key enabler to drive long-term growth. We'll go through a couple of these deep dives, but this is what I've been talking about in the previous slide, which is how do we think about these levers in terms of the following key areas. The first is, how do you build resilience within the function? How do you manage the increased digital risk that an organization has when building a pathway to modernize your tech function? How do you disentangle your technology, given some of the complications that we're seeing from a geopolitical perspective, but also to represent and reflect the changing regulatory environment from a data privacy perspective, from a cyber perspective? So how do you think about systematically disentangling your current technology environment to be more adaptable to these changes? The third lever is really around how to enable your business for growth and resilience using digital and technology. Martin will share a couple of examples from that particular area. But let's start off with the cost element. Martin correctly talked about cost being a key element of any CIO's agenda and CEO's agenda. And many organizations spend substantial amounts of money on technology. We'd like to use the word fit for purpose. So when we think about a technology function, it should be a key enabler of a business outcome. But it has to be built on a fit-for-purpose basis. So let's talk about that for a second. Many organizations today, we talked about the margin pressure that's being created through hyperinflationary environment. Compounded to that, many organizations are spending significant amount of money on technology based on a per industry basis. However, there is significant value to be generated. And through a systematic approach of re-gearing and refactoring your technology and digital function, there are significant cost savings to be gained. However, in gaining those cost savings, you still need to build a fit-for-purpose technology function that helps you deliver the growth ambitions of the organization. So let's talk about this for a second. We as Boston Consulting Group have done over 3,000 types of projects where we've worked with CIOs across the globe to really re-gear their tech functions. And we believe typically there's between 30 to 40% of cost savings that are available to an organization when reshaping their tech function. And these are the typical levers from sourcing optimization, apps and infrastructure simplification, operating model optimization, and the last is value-based portfolio reprioritization. The important point that I want to flag is we think that 30 to 50% is the total amount of savings available. Of that total savings pool, only 30 to 40% is available to be saved just purely as a singular IT function. The rest of those savings can only be generated through strong collaboration between business and IT. So when we think about operating model changes, when we think about cost savings, when we think about building for growth, it is very clear that IT cannot operate on itself, by itself. A systematic approach to building an operating model that creates a strong partnership between business and technology can not only help you create savings, but as Martin will talk about a bit later on, also help you re-gear yourself towards a growth projection. Let's talk about disentangling technology. What does this mean? So there are a number of drivers today that exist where organizations are starting the process of disentangling their technology environment. And a number of drivers exist at the moment. The first I've mentioned is around data, the regulatory component. Data privacy regulations, as exists in this country, as exists in many other countries, mean that a bias towards organizations with a strong local footprint is needed. Similar regulations could be anticipated from a cyber perspective. So that's one driver of disentangling your technology environment. The second angle is around risk mitigation. Again, we're seeing increasing geopolitical trade frictions that are happening, and in some cases, some organizations, depending on where they are, have been kindly asked to reconsider who they partner with a preference towards vendors and partners in their trading block, as it were. So that's something that an organization needs to be cognizant of when building an ecosystem of potential partners from a technology perspective. The third is around actual business and user customer expectations. As you build digital solutions in particular, the ability to be localized not only from a customer perspective, but also from a technology and vendor perspective also needs to be clear. And that is one of the drivers that we see. We're not saying as BCG go out and disentangle your technology from the outset. A systematic approach needs to be taken, and a very pragmatic one at that. So what we recommend is look through your technology stack environment from who you work with from a social media perspective, through to your data platform, through to your infrastructure. Evaluate against these levers, build out plans, scenario plans, cater those plans to the way you're thinking about your future architecture. So at least you have optionality from an architecture perspective. And that's clearly needed given some of these macro trends that we're seeing. The other area that I'd like to talk about is from a digital risk perspective. So as we said, we need to build more resilience into organizations. And when we look at the amount that organizations could be spending to offset cyber risk, that number is significant. It's predicted to be north of $3 trillion this year. So that's a significant amount of capital that's just being offset to the potential threat of cybercrime. Most importantly, I'd like to highlight this number here. 82% of breaches are caused by organizational and people failure when it comes to cyber risk and cyber threat. So too often organizations look at cyber as an insular threat that is just purely facing the technology function. Cyber is a business threat, and therefore the entire organization, the operating model, needs to be deliberated against how to not only mitigate the threat of potential cyber, but also what happens when a cyber threat does actually happen in the actual event that you are under risk. In that case, the organization should be galvanized across multiple dimensions to ensure that the business can actually quickly recover from such a threat. The other issue that many organizations are facing, and it's particularly nuanced in South Africa and indeed Africa, is a lack of credible talent in cyber and digital areas. So building talent frameworks, talent attraction campaigns, talent retention campaigns, particularly on this topic, is super critical. But also the ability to galvanize global talent to work on these topics within African context is as important. So I've talked through how to create more resilience within the tech function. I've also talked through how to re-gear the tech function to be more fit for purpose. But there is a bigger opportunity at play here as well, which is how does digital and technology really gear yourself up for growth, to be an active partner of the CEO and driving a growth agenda. And I'd like to hand over to Martin to talk to us a bit about that topic from an SAP perspective.
Yeah, being with SAP for many years, I think we evangelize digitization, we evangelize cloud for many years. And what we heard also from Uwe today morning is that still many customers are based on a very old ECC environment. Yeah, and of course the new world is around the corner, but it's also difficult to get there. But why you should change? That's the most important one. And I really like the study is basically you see this green line where you see the digital champions and you also see the digital laggards. So if you are not investing or driving to tech innovation, you are lagging behind your competitors, and you have a big implication by losing the space. So there is an opportunity window of missing the train actually if you don't focusing on this one. There is still value, of course, but the difference is actually it will triple by 2025. And what we see also, we are already here. So, and the first half year of 2023 is already passed. How can we get there? So what are the main areas if we focus on the potential, on the short-term opportunity maybe? Everybody's talking about AI, ML, ChatGPT and stuff like this, but how can we adopt it? So one of the areas is to really improve and forecasting planning and forecasting. Very obvious, is already embedded in S4, can also be run on some of the LOB solutions like Ariba or digital supply chain. It's already there, so it can also be implemented. It's not a long year project. It can also be deployed very fast, but it's an opportunity window to also start with. Optimize prices and contribution margin. We learned that a lot of cost management is on vogue today. You have to focus and manage your cost base with your suppliers, but also in the internal company. And there are also companies, they deployed negotiation bots by utilizing AI ML technology for simple stuff, of course. It's not going to manage the whole construction project for you, but for easier stuff, it can also be run on a bot, and you get the reference points from the system, or even by utilizing the Ariba network for supplier collaboration. Optimize conversion rates, especially if you're in a consumer sales market, to make the sale successful, to see and analyze what are patterns and root causes, why somebody is really not progressing, for example, with a shopping cart or with a sale. And lastly, supply chain transparency. We saw once the ship got stuck in the canal, a lot of companies, they even did not know where is my shipment. So we had this crazy picking up the phones, calling all the different dispatchers, trying to find the stuff, high manual effort. And especially if you have your master data not clean, and you have 5 different records, many supplier names, it's gonna be a very difficult journey in this space. So how can you fund the journey actually? So you have on the first dimension here, fund the journey, cost optimization. If you have sourcing tools helping you to bring costs down, you can use them to bring the cost down and also to fund larger transformations. If you are focusing on different areas like working capital management or financing, it's also a very easy way to bring costs down on a very short-term base. But what is very important also to me, being a value advisor before, you need to get your use cases done. You need to understand where can you unlock the biggest value in your company with that use case, and then to prioritize. It's not basically like every unit will come to you and say, oh, I have a wish list for this application and that application, but in the end, is it really driving the business impact and the value in those crisis times? And the interesting one is we also have the opportunity window to get and to free up money to fund those large transformations. But also, Nimal, from your perspective, what is also important to protect the core?
Yeah, exactly. I mean, we talked a lot about point 3 and point 5 here, which is around decoupling and disentangling your technology environment, and also from a cyber risk perspective. Complemented to that is really understanding your tech partner ecosystem landscape with that lens of how to potentially disentangle your tech environment. So how does that impact on your planning process? How does that impact on your ability to cultivate, generate and conclude partnerships, not only with local vendors, but also international vendors? How do you create optionality with the partnerships that you currently have? All those questions need to come into play when you're thinking around your ecosystems. We talked a lot about cyber risk. Allied to cyber risk is really system and infrastructure risk, and really building an environment where you're using things like SRE, site reliability engineering, to continuously iterate and improve your overall performance and uptime standards. So these are things that need to be factored and engineered into the business from these savings that you're getting from funding the journey. So these savings help you protect your core business, but also you want to be future-proof and drive future growth. And there you really need to start thinking about tech modernization, tech-enabled growth. Martin talked about tech-enabled growth, but perhaps let's talk about this mystical topic called tech modernization. Martin, some of your perspectives on what you've seen from an organization perspective embarking on tech modernization.
So being with SAP, for me, it's very easy. You have to buy S4 as soon as you can, right? But let's look into some of the different dimensions as to really what are the magic ingredients or what are the tools you really need to combat the current topic about cost and inflation management, but also to be future ready, to be focused on what are the different scenarios. So in an ideal case, if you leave the room after the session, you would think about it, okay, what is my company doing to maybe map it against the 4 scenarios, and how are we prepared, and what kind of information do we have? So for example, the analytics space. We saw that once the ship got stuck in a canal, a lot of companies were really unable to identify how they served their customers. It was not about getting the material, but basically there have been purchase orders out, they couldn't deliver, they couldn't serve the customer, and then what are you going to tell them? They can also move to the competitor in this case. So analytics with Analytics Cloud, for example, enables you to get all the dashboards done to really be able and to have this on real-time environment. And of course, you have to have clean data. Without clean data, you can't actually go into this path. Combined with new AI models, it definitely helps you to make also some forecasting scenarios here. Next one, digital supply chain, of course, applies only for companies are running in a supply chain model. Doesn't apply necessarily for a bank. If the pencil comes 2 days later, I think that doesn't matter in the end, but for some of the manufacturing ingredients or plastics, granules, it becomes a very critical one. There is also some good use cases with digital supply chain and planning and forecasting, sharing this with the supplier. For us, the next evolution is also to get the transparency across your supply chain. So if your primary supplier, which is a retailer or or a wholesaler in Africa, if you buy from them and you only have visibility to his stock, it's nice. But if he is mainly sourcing from China and they shut down the harbor, or in the scenario with the politics, if they shut down the exports, what we now see with the raw materials discussion just starting in China, then you need to be prepared to have the, let's say, backup scenario. Sourcing and procurement is, of course, to understand spend patterns. Where people are spending money, if they know we are getting close to the end of this year, so spend budgeting is still there. So a lot of business units will spend the money because they fear that they are not getting the budget also next time. But use the tools to run reverse auction, to optimize the cost base, and also to streamline purchase orders with a digital backbone to capture also information like order confirmations, advanced shipping notices, because once you have the data, you can actually learn and train also the machine or the model based on it. And PDF is not data in this case. Sales, get an understanding for your customers. To try to understand when they are canceling in a purchase order, what is the root cause there. Most importantly, also to think about how can you adjust the prices. If you have a price list set up once a year and you see that the inflation rate is peaking up and your raw materials are going through the roof, or freight costs are going through the roof, you need to be able to adjust those prices very fast. Supply chain finance, another capability to also think about financing instruments by utilizing banks for your suppliers. Some pieces are really relevant to unlock also cash flow by using that capability. And to really talk to the large vendors and large middle tail suppliers to get a financing option for them. Working capital management, if you have the tendency to stock a lot, you saw that many companies will stock items right now, so no one is basically focusing on the cost of the working capital of the inventory, but rather they want to get the material done. They want to have the material to serve their customers by facing the different supply chains. We saw an interesting mention in the keynote from Oliver, receivables finance. Also SAP run it. Get an understanding by using digital tools. When do you expect the customer is paying you, and how can you speed this up, having the right progress, or even training the model that basically tells you, well, if after 30 days the customer is always paying after 50, to either adjust the payment term or to basically have the internal calculation for that receivables finance. And we should not forget human resources. So the whole employee management. In times of crisis, there is also tendency, we saw this at COVID, what is happening around the globe, how do you manage your talents, how can you get a pulse by maybe using an employee survey to get an understanding what is the pain point. Also many companies are using this one to survey their employees in a structured manner to really understand what is the pain, whether this is on a cost base or salary or some of the work-life balance topics to really manage or even simulate different scenarios when it comes to potential salary increase rates and models. So going to the dimension, what is now the act to action? So if you want to combat inflation and potential uncertainties, you definitely have to spend time into insight-driven analytics. If you don't have some capabilities there, you need to start now. Accelerate cost and cash management. A lot of companies, what I asked you before at the beginning, are really starting to think of and to have actions in regards to cash management, but there may be also more to manage this one, to identify and also to see the patterns. What is happening over a series of time, where organizations are spending money, or if that's a hint towards the year end, if companies or business units will spend more money just for the sake to keep the budget. Get nimble in decisions and pricing. So if you don't make nimble decisions in a timely manner and you're still waiting and waiting and waiting, it will not help the organization to really come out of it. As I mentioned with the price list, if you have a time period of 6 months in between, that's a very, very tough one. Or if your supplier is really asking for an 8% increase or for a 20% increase, but this relates only to a little piece of the freight costs, which may be just the 1/10 of your buying price, then it's also a very different scenario you have to act on. Build an agile supply and demand chain, especially in regards to how you source and where you source products from, where do they come from. Given the different scenarios, be prepared for tough situations between North America and China, export controls, licenses, etc. So you definitely need to have a plan B. And then you also have to have the access, for example, to the SAP Business Network, to a new supplier base or to alternatives which you can utilize in a very fast manner. And lastly, become digital and a resilient company. And that's maybe the hardest part on this list, because this is all about change management, getting the kind of understanding where companies need to go. How can you bring the employees there? How the new world of digital, cloud, etc. will look like? And as we heard from Wusi, the vision is always nice, and you have to make and combat the challenges to bring the organization. But once you have it, who has a smartphone, by the way, in the room? Okay. How hard was it before? And would you miss it today? I'm pretty sure you would. So the question now for us is, are you ready? Are you ready for a tech-resilient infrastructure application stack to really combat those challenges? Are you ready? No? No one is ready? Okay, so that was a waste of time for the last 40 minutes. I think it should be a clear yes. It was a pleasure. We are open for questions. Happy also to connect afterwards. There are some interesting findings and white papers published by BCG. SAP also published some white papers on this one. If you want to have deep dives, talk to your colleagues and my SAP colleagues locally. Happy to connect. Yes. Mm-hmm.
Because as South Africans,
Yep.
and our CEOs, our IT managers, they're all just in that particular core.
Correct.
But even when they go into the enabled transformation,
Yeah.
they don't really do it correctly.
Mm-hmm.
I come from consulting company, I'm a consulting, so we be engaging with clients. We sometimes tell them this is not the correct way to apply S4HANA principles, but again, there's so much
Mhm.
but you actually then won't be resilient in the long term.
Yep.
And how, as a consultant or as employees, do we actually affect that change? Because often it's not us leading the decision. It's, you know, it's like, and as a developer, you can develop something, but you're constantly getting customization changes, and sometimes don't make sense, but you've got to just do the job because
Yep.
custodian made.
Yep.
So how do you see South Africa, and specifically from, and you said you dealt with a few case studies on this, so how do you actually implement that change with that South African mindset?
Sure. I think it's a great question, and certainly the traditional mindset of not only South Africa, many CIOs across the globe, is around protecting the core. You know, one talks about the curse of the KPI. If you look at the typical KPIs of a CIO, it's around stability, security, protect the core. What we need to move the conversation to is protect the core, absolutely, and. It's not or, it's and. And how do you gear up for growth? And how do you create cost savings that allow you to move onto that journey? So that then becomes a much more strategic conversation with the broader leadership of an organization to say, how can tech and digital move the needle, not from a cost or protect the core perspective, but from a revenue, a market share, a value perspective. And once that debate has been anchored at leadership level, then it becomes very clear that there is a change agenda that needs to happen so that it's an and conversation, not an or conversation.
Yes, but often it's not, like, especially as a consultant, you often get excluded from those conversations.
Mm-hmm.
That's why I'm asking, like, I mean, is it just about presenting use case after use case until that happens, but you're not really in those leadership meetings? You're telling me I need to go find better clients.
Well, you need to widen the conversation, widen the aperture of the conversation, so that it's very clear at a broader leadership level what the value at stake is. So it's not just only with the CIO, it's with broader individuals. Progressive CIOs who get the concept of fund the journey, protect the core, grow and enable the broader business, they're all in on this type of topic for sure.
Any other question? Yeah.
I'm interested in the slide where you showed the cost on the cybersecurity breaches and things of those things. I just want to understand the breakdown between your private and your public sector
Mm.
as to what is that breakdown, because that's quite critical in the sense of we sit with a lot of public sector customers or public sector as a whole.
Mm-hmm.
Cybersecurity is a real risk, it's
Yep.
a real threat, and we don't understand how much of that is impacting them
Mm-hmm.
from a cost point of view, what it means.
Yeah.
So that's an opportunity for us to look at and start to
Yeah,
help them in that.
I couldn't give you the breakdown offhand, but we do have it in one of the reports that we've recently released. I would say that when cyber threats happen and cyber hackers, they're not looking at industry, public, private. They're looking for loopholes. So honestly, it does not matter. In many cases, we thought, a few years ago, we thought, companies specifically in the industrial goods space would be somewhat immune from cyber risk because they don't have a customer component attached to their business in some cases, and because of that, customer data wasn't an issue. But clearly, we've seen that. So it's not a question of public, private, industry. It's completely agnostic. It's just protecting your environment first. It has to be your main focus. Because honestly, the hackers don't care.
And are we able to, just as a follow-up, are we able to maybe draw on some scenarios or
Yes.
some market to
Yes.
kind of bring this to the forefront of their strategy, saying it's a loophole that they're
Yes.
looking for, and what are the things that they need to start prioritizing and
Correct.
actively engaging on?
Correct. So, as BCG, we've done a number of studies into the space, and we actually have a cyber center of excellence across the globe, but principally domiciled in Tel Aviv, as kind of the leaders in cyber in this space. And we've, put together a number of different research reports that are available online that showcase the typical pathways of how to protect yourself from a cyber perspective. I will say that in our work that we've found is that's a good starting point, but the real starting point is a real thorough understanding of your organization and the potential frailties that exist, both from a technical perspective, but also from a people and op model perspective. Because as we saw, 82% of threats actually emanate from an operating model or people perspective.
Any other questions? So we both thank you so much for joining. We had great fun, I would say.
Yes, absolutely.
Otherwise, if the room would have been empty, that would be disappointing. But we really enjoyed it. You made definitely the right decision. And thank you so much. Have a great day. If you want to connect, we are still around. Also happy to get on a coffee with you. Thank you so much. Have a good one.
Thank you.